If you want to be profitable trading market pullbacks, the best way is to catch the first pullback. The first pullbacks are the trend entries that can be found at the very start of a new trend. In today's video, we'll explore the idea of trading the first pullbacks in a new trend, and I will share my strategy to pinpoint the exact moment to enter the market. In an ideal situation, the most profitable way to trade the market is to catch the run from the very top and cash out at the very bottom of the market. The opposite is also true if you want to catch it from the bottom and exit right at the top of the market. However, the nature of trading is such that we never really know where the top or the bottom is. Above and beyond that, catching the top or the bottom of the market is probably one of the harder tasks, and many traders have lost a substantial amount of money while attempting to do so. Instead of entering the market at the top or bottom, the first pullback allows traders to enter near the top or bottom, as shown in this example. This is similar to entering the market at the top or the bottom, and you can still enjoy the majority of the benefits. Hence, entering the market at the first pullback is the next best entry. Essentially, the first pullback in the new trend direction is also the final test of the extreme in the old trend direction. Understanding the final test of the extreme is very important when identifying the first pullback. Just to be clear, the first pullback is not a reversal setup. Instead, is a trend following setup that enters the market at a very early stage of the new trend. It is the first trend entry immediately after the price has reversed. While many traders would be afraid to enter the market using this technique, smart traders understand that this is a low risk and high reward setup. Now let's explore the concept of first pullback in the new direction. As we know, when the trend ends, it doesn't imply that the new trend would start immediately. So it is important to know what price action signs to look for when searching for the first pullback. Before we search for the first pullback, we need to analyze price action right before it happens. Using this example, the market is currently in an uptrend, which is the old trend direction. The first indication of a potential new pullback in a new direction is when you see the first lower high. This is because the lower high is a sign of weakness that shows that the buyers are not completely in control. This is also a potential final test of the swing high. Buyers are testing to see if they can move any higher. Meanwhile, the sellers are keeping a close eye. And once they know that the buyers are exhausted, big sellers would take control of the market and they would push price lower. However, the confirmation of the final test requires a lower low, or in this case a break below point C. When you have a lower high and when price breaks below point C, the first pullback in the new direction is completed. In other words, the easiest way to find pullbacks is to spot ABCD patterns. BC wave is the actual pullback, but the pullback must include the CD wave, where point D moves beyond point B, or the pullback is invalid. The same applies here. Price must move below point B for confirmation of the first pullback in the new trend direction. Once you have a full cycle, the chances are higher that the market is now in a downtrend, and the chances are now slimmer for price to move upwards since the downward market has already started. Now, understanding the first pullback means nothing if you don't take any positions. You either catch the new pullback or you missed it. Truth to be told, there is nothing much you can do about it once you miss the pullback. Trading is all about preparation, and the more you are prepared for it, the more you can grab a high probability trade. So in your analysis, you must be able to identify some important signs for catching the first pullback. First sign is that the pullback fails in the old direction. A break below point A represents a confirmation that the pullback in the old direction has failed. This is also the first lower low that we are looking for. While we don't know what happens next, we can only wait for more price confirmation to show us if the buyers or sellers are taking the lead. Nonetheless, the only thing that we are certain is the old trend has lost its drive, and that is an important sign to note. Second sign is a trend bar showing confirmation of failed pullback in the old direction. While a failed pullback is important, we need the probabilities to stack in our favor. Thus, in terms of price action, you need to see a clear break below point A. And one of the best ways to identify seller's conviction is by finding one or more long-bodied bearish trend bars breaking through point A. This is a strong confirmation that the pullback has failed, and the probability of getting a fake failed pullback has greatly reduced. Trend bars are great to show strength in the market, and you should look for them especially at the start of a new trend. They are very useful signs for trading success, especially near price extremes. If the trend bar is longer than the average size bar, this is also a good indication of momentum, and this is usually the start of a new market rally or decline. If you find that the trend bars have very small tails, that is evidence that the market is one-sided and the momentum is increased further. Third sign is related to timeframe correlation. When chasing the first pullback, you should try your best to understand timeframe correlation. For example, a price extreme at the hourly chart is more relevant when trading a 15-minute chart. A price extreme at the daily chart is more relevant when trading the hourly or the 4-hour chart. The timeframe below shows you the pattern or the pullback that you are looking for. Looking at this example, you can see from the daily chart that price was very far away from the moving average line. This point is considered the extreme, since it was the point where it was the furthest away from the moving average. However, there was no clue showing the lack of buyers until the first lower high on the 4-hour chart. Using the daily chart to identify the market extreme, you can then move to the 4-hour chart to pinpoint when price pullback fails in the initial trend direction. The first clue that the buyers have run out of strength is the price action double top, a final test of the extreme. Then it was followed by a lower low. The confirmation of the first pullback in the new trend direction was when price broke below this bar. If you stayed on the daily time frame, you might not have spotted the pullback and you would have missed a good pullback entry. Fourth sign is the creation of a reversal pattern. Since a first pullback is an early entry in a new trend, it should be no surprise that you can find many first pullbacks immediately after a reversal pattern. So let's explore some conventional reversal patterns. Just to be clear, the idea is not to trade the reversal patterns, and it's important to wait for price to have reversed before looking for any first pullback entry. First pattern, double top or bottom, and the neckline pullback. A double top pattern is a good and simple indication that the price has tested the extreme one last time and resulted in a final test in the old trend direction. The double top is only a potential start of a new pullback, and the clues that you should be looking for are the new lower low, point B, and the new lower high, point C. The retest of the neckline is an extra but powerful clue, as it is where the old support becomes resistance. In other words, the double top is only the first clue, but not a confirmation that the first pullback is ready. Another pattern is the range market breakout. A range market can happen around the market extreme or in the middle of a trending market. A range market is only formed if there are two touches on either side of the market. As you can see from this example, point B is the first lower low, and it's also the first break outside the range. However, point B can also be a false break, and you can only find out by watching point C and point D closely. Point C is the most important one for our analysis, being the first lower high and also a retest of the resistance previous support level. Like all other pullbacks, the first pullback is only complete once we have point D, which is the break below point B to form a second lower low and also a complete ABCD pattern. The head and shoulders is another classic reversal pattern, and like a double top, it's also a good sign of price exhaustion. Head and shoulders pattern would consist of three tops, where the left shoulder is the first top, the head is the second and the highest top, and the right shoulder is the third top. The two lows in between the three tops would determine the shape of the neckline, and it can be an horizontal or a slope neckline. In an horizontal neckline, the entire head and shoulders pattern relies on the fact that point D must be below point B, which is also below the neckline. The neckline carries quite a bit of probability weight. If the price fails to break below the neckline, this could turn out to be a double or even a triple bottom bullish continuation pattern. Our first pullback would basically be the right shoulder in the head and shoulder setup. The first pullback in the new trend direction is one of the most rewarding setups. They don't always work 100% of the time. Sometimes they offer small profits, and other times the price will maintain its initial direction, despite all reversal signs we identified. But if you learn to correctly identify the first pullback, the profits can more than make up for any other failed attempts. As always, if you learned something new and found value, leave us a like to show support, subscribe to our channel and hit the bell icon to stay notified when we upload new videos. Until next time.